How much money can one simple ETF pay you every single month without day trading or stock picking? Well, I'll show you. And yes, the numbers are real. So a lot of people ask me this. How much does SCHD actually pay me every month? That's exactly what we're breaking down today. Now, this isn't financial advice, but it is based on real-world math from real investments. We're talking passive income, no flashy trades, no chasing the next Tesla. You'll see how my SCHD pays me every 3 months and how I average it out monthly. Plus, I'll walk you through exactly how much you'd need to earn $500, $1,000, even $3,000 a month. But here's the part no one likes to admit. ETFs like SCHD might actually outperform your favorite crypto in the long run. Yeah, drop your thoughts in the comments on that one. Let's dive in and see what's really happening behind these dividends. Chapter 1. What is SCHD? Let's start simple. SCHD stands for the Schwab US Dividend Equity ETF. It's not a meme stock. It's not some new tech play. It's just a basket of America's most reliable dividend-paying companies. Companies like Coca-Cola, Verizon, Pepsi, and Lockheed Martin. Brands we use every single day, whether the market is up or down. Now, what makes SCHD special? It's selective. It only includes companies with at least 10 years of consistent dividend payments. So, no risky startups in this fund. And here's what matters. It pays a dividend every 3 months. Right now, the dividend yield sits around 3.5% to 4%, depending on the market price. Plus, it charges almost nothing, just a 0.06% expense ratio. That means for every $10,000 you invest, you only pay 6% a year. And over the last decade, SCHD delivered about 10 to 11% annual returns, including dividends. Pretty solid for something so boring, right? Chapter 2. How I built my SCHD position. Okay, so let's talk about real numbers. I started investing in SCHD just like most of you might, slowly. My first buy wasn't huge, just a few $100, but I kept adding. Sometimes it was $500 a month, sometimes $1,000. The key thing? I didn't stop, and I reinvested every single dividend. Now let me share a case that inspired me. There's a friend of mine. Back in 2014, he bought 1,000 shares of SCHD for about $37,000. And guess what? He didn't add a single dollar after that. But he checked one little box, the DRIP setting, Dividend Reinvestment Plan. That meant every dividend automatically bought him more shares. Fast forward 10 years, he owns over 3,700 shares after a stock split. His portfolio grew to nearly $100,000, and it now pays him about $274 a month. And here's the best part. He didn't sell during crashes. He didn't time the market. He just let the dividends stack up. I took that same approach. Every quarter, I get my payout, and I reinvest it. Rain or shine, green day or red day. And little by little, the share count grows. So does the income. Chapter 3. Passive Income Breakdown. How much SCHD pays me now? Now, let's answer the question you're here for. How much does SCHD actually pay me right now? Let's break it down. Let's say your portfolio is around $30,000. So you'll get 3 months worth of dividends at once. But for budgeting purposes, I like to break it down monthly. If your portfolio grows to $50,000, now you're looking at around $1,700 to $2,000 per year. That's roughly $150 to $165 per month. What about a bigger number, say a $90,000 portfolio? That could pay about $3,600 a year, which is $300 a month. And let's not forget DRIP. I don't take the cash and spend it. I let it buy me more SCHD shares automatically. That means next quarter, my payout is a little bigger. And the quarter after that, even bigger. This is how the snowball builds. It starts slow, but it gets faster the longer you stick with it. And the best part? Even when the market drops, those dividends keep rolling in. They buy even more shares at lower prices. So downturns, they actually help you build wealth faster. That's the magic of passive income through SCHD. Slow, steady, and compounding. Chapter 4. How it grows over time. The drip effect plus market growth. Now, let's talk about what really makes SCHD powerful. It's not just the dividend yield, it's what happens when you reinvest those dividends. This is called the Dividend Reinvestment Plan, or DRIP. Instead of taking the cash and spending it, I let SCHD buy me more shares automatically. And here's where it gets interesting. More shares mean more dividends. More dividends mean you can buy even more shares next quarter. It's a snowball. And the longer it rolls, the bigger it gets. Let me give you an example. Let's say David started with 1,000 shares. Through pure reinvestment and without adding new money, he could grow that to over 3,700 shares. And the dividend income? It could go from about $1,300 a year to over $3,200 a year in less than a decade. That's more than double, just from reinvested dividends and the fund's growth. But it gets even better during market crashes. When prices drop, your dividends buy more shares for the same amount of money. So crashes aren't just bad news. If you stick with DRIP, they're opportunities. Now, let's zoom out. SCHD's total return over the past decade, including dividends, is around 10.9% annually. That includes bull markets, bear markets, and everything in between. So, as long as your portfolio grows from market appreciation and dividends, your income grows alongside it. It's compounding on top of compounding. And that's how a portfolio that started small can eventually pay you thousands every year. It's slow at first, but give it time, and it builds real wealth. Chapter 5. Realistic Milestones. When will I make $500, $1,000, $3,000 a month? Alright, so when do you actually start seeing meaningful income? Let's break down some real numbers. If your portfolio is $150,000 and SCHD yields around 4%, you're looking at about $6,000 a year. That's $500 a month on average. Want to hit $1,000 a month? You'll need about $300,000 invested. That'll bring in roughly $12,000 a year in dividends. Now the big one? $3,000 a month. That's $36,000 a year. At a 4% yield, you'd need to invest around $900,000. Yeah, that's a big number. But it's doable over decades, especially if you reinvest every dividend along the way. And don't forget, your portfolio value can also grow over time. Historically, SCHD has returned about 10 to 11% a year. Price plus dividends reinvested. So your money isn't just sitting there, it's working. Now, you might be wondering, how long would it take to reach these numbers? If you invest $1,000 a month with an average 10% return, in 20 years, you could have around $680,000. In 25 years, that number could pass $1.1 million. So it's not overnight, but it's powerful. And if you're starting with savings, like $50,000 or $100,000, you're already ahead. The key takeaway is this. It's not about guessing the next big stock. It's about consistent investing, plus dividend reinvestment, plus time. And eventually, that $500 a month becomes $1,000, then $3,000. Step by step, share by share. Chapter 6. Answering Common Questions. Now, let's clear up some common questions. I know these are on your mind. First, should I wait for a market dip to buy SCHD? Honestly, probably not. Because timing the market is nearly impossible, and SCHD rewards time in the market, not perfect timing. Buying consistently, whether the price is up or down, is how the compounding starts working. Second, can SCHD cut its dividend? It could. Nothing is guaranteed. But here's the reality. SCHD has never cut its dividend in over 10 years. In fact, the dividend has grown from about 91 cents per share in 2013 to nearly $2.50 per share by 2023. That's nearly a 175% increase. Third, why not just buy a higher yield ETF like QYLD or JEPI? Great question. Those ETFs pay more, yes, but SCHD has shown stronger total returns and better dividend growth over the long run. Plus, it has a lower expense ratio of just 0.06%, and it's built on companies that have survived recessions and market crashes. The takeaway? SCHD is not a get-rich-quick play. It's a long-term, income-producing machine, one that grows slowly but surely. Chapter 7. My monthly routine with SCHD. Okay, so here's exactly what I do every month. I set up an automatic investment. Sometimes it's $500, sometimes $1,000, depending on my budget. And when SCHD pays dividends every quarter, I don't take the cash, I reinvest it automatically. That's the key. I don't try to time the market. I just buy shares, rain or shine. And honestly, I rarely check my portfolio balance. Why? Because it's a long-term play. The goal is to build an income stream. And every time a dividend hits, my share count goes up. That means next quarter's dividend is bigger. It's slow at first, but it builds. It's just simple math working over time. That's my whole routine. Auto-invest, reinvest dividends, stay patient, month after month. If you're just starting, don't get overwhelmed by the big numbers. Start small, be consistent, and let time do its thing. Your first $10 a month might seem small, but someday that could turn into $1,000